Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Luminar Technologies, ticker symbol LAZR. And so here I am recording this on Friday, December 27th, after the market has closed, and Luminar closed at a price of $5.84, being up a little over 6.5% on the day, and this is following a pretty nice gap up. So I wanted to go over that also because we had hit this level I had talked about in the last video, $6.11. I wanted to go over if I still think that is an important level, as we do have a couple lines here, an intersection of that one and this white downtrend. I do still think it will be important, so I do think it will be good for a price to continue to go higher. But something happened today that gives me a lot of confidence in Luminar, but if that does fail, it's kind of a signal that price could be going lower. So I think that will be important for us to keep our eyes on. And also, I kind of dove into a little bit of a rabbit hole, just looking at some car safety stuff, doing a little bit of a timeline. So I will go over that at the end of the video if you are curious. But yeah, I mean, I feel like, there's a lot going for Luminar into the future, moving into, implementing LiDAR in cars, car safety, auto safety. So yeah, that's kind of why I jump into that, but I'll have a timestamp to that later in the video. I really just wanted to go over the chart first. And so what we did today that really stands out to me, not only did we gap up, but the low that we hit today was pretty significant, or I guess I should say the low that we did not hit, I think was pretty significant. And so following yesterday, the 26th, that was Thursday, we closed at a price of $5.48. And following that, we gapped up and then closed lower, but the low that we hit today was at a price of $5.54, being higher than yesterday's close at 548. And so there still is a gap here. And a while ago on the channel, I used to talk about gaps a lot. And recently I've been learning, always learning, that sometimes it is good for gaps to be left behind because it's a sign of momentum or a shift change in stock price. And I feel like that is what we have seen with Luminar, but of course that could be negated next week. So do keep an eye on that level of $5.48 at the close here. It says 549 there, but the cursor's lined up with the top of that candle there. 548. And so, yeah, because if we pull back to that level, that suggests that, the momentum that we had from this gap has diminished, and then price could be pulling back. If there isn't that momentum to keep it up, to keep the stock price up, then it's probably just going to fade lower. So good to keep that in mind. And so for me personally, I have some Luminar shares and I would like to get more at a discount. But at the same time, if we go back to $5 a share, it might start bleeding into the fours. And then, it's like, well, where's the bottom going to be? So what we see here with this low that we saw on December 24th, so that was Tuesday of this week, Christmas Eve was a shorter day, and on that day we hit a low of $4.93. So, I'd really like to see that hold as the low, but if it doesn't, that's fine because we have been experiencing all of this bleeding. I'm not going to, worry about it too much. But like I said, it would be great for that to be holding as the low. And some things that are encouraging about that is the candle pattern for that day. It looks like it was this spinning top and, a little bit different than it was on Monday on the 23rd, because we do have the same kind of, spinning top pattern. But that was a red day where we opened up here, closed down here, and so that's really just a continuation of these red candles coming down. But on the 24th, we opened lower and closed higher. And so that to me suggests that this spinning top could be a reversal signal. And that is in fact what we have seen since hitting that low of 493. We got this nice big green candle yesterday on the 26th, going up a little over 5.75 or exactly 5.79% on the day. And then we did, get this gap up. While it was a red candle today, we did get a pullback. So that doesn't look so great in that sense. We did go up net 6.57% on the day. And we did hold that gap. So I think that there is a lot of strength there. So I feel pretty good about that. But if we do break below 548 next week, start to head lower than that, I could see right around 525, maybe 519 or 520 where the cursor is here. Maybe that could be acting as support, as we did have some overlap of candles here at the bottom. So, that would be kind of like the best worst case scenario if we do pull back below 548, maybe find a bottom at 525 to 520. But if we do go lower than that, I think that we're going to be taking out the low of 493 and continuing lower. And then, I just like to have fun with numbers. So maybe, 469 or 420 might be some following levels to think about adding if one is interested in doing that. And so that's kind of what I would do probably, but the reality is, or at least what I'm thinking, I don't have a huge position in Luminar, but my thoughts are, well, hopefully we did find the bottom here. Hopefully we are bouncing and we are going to maintain that. And while price is still relatively low, I want to more aggressively be getting my average down. So, when I do get to break even, I can trim, so I lower the risk. And then, I can add more comfortably on pullbacks. And so I'll go over that. I will have to step back to show kind of levels that I'm thinking about with that. But I did want to just point out, the $6.11 level that I have marked here. That is the 1618 from a Fibonacci retracement. And I had talked about the possibility of the stock price coming down to this level in the last video. I didn't think it would happen. I didn't think it would happen this quickly, but it did happen. And we are, effectively trading there now, straddling that level today on Friday, December 27th. Opening above not only 611, but also this white downtrend, but then closing below. So we'll have to see how the stock price handles or responds to, those levels in the upcoming week, which I believe is also going to be a shortened 4-day week, because I think New Year's Eve might be half a day. I'm not sure about that, but I imagine New Year's Eve on Wednesday, New Year's Day on Wednesday next week will be, the market will be closed. So do keep that in mind. But also, I might be mistaken about that. I am not exactly sure. But yeah, so just looking at the levels here, taking a step back to see where they originate from. Let's see. Okay, so if I highlight this, 1618 there, that is based on this Fibonacci retracement that I have in yellow here, going from the low that was hit on September 12th. That was at a price of $10.88, and then going up to the high that we hit on November 13th, which was $18.60. And so from that, that's how I get this 1618 that we did break below and are currently right around now, just below $6.11 at $5.84, or, after hours, $5.88. But then, so, considering this, I do feel like $10.88 or maybe 11 to 12. I think it's possible that could be serving as some resistance if we do keep this momentum and do continue to go higher. But, I might revise that based on a Fibonacci extension that I did that is how I get these levels up here. And so I had drawn this Fibonacci extension, so just a little bit different than a retracement. So a retracement is where you expect it to pull back to. An extension is where you expect it to go to. So not necessarily a pullback, but really, an extension, a continuation of a pattern. So that's like from this move to the upside, then continued down, and then going down here. And then the bounce would be from that Fibonacci extension. And so that is what I have drawn here, which I did not base on a bottom. And that's because I believe I had that up in the last video that I did, which I imagine came out on November 21st when there was this 1 for 15 reverse split. Just kind of redrew the lines on here to get an idea of levels the stock price could be bouncing to. But of course, we did fade a lot lower than the low we hit on that day, which was, let's see, a low of $9.51. I was hoping for a big reversal on that day, and we did not get it. We just got this continued bleed downward. Quite possible we still continue to bleed downward, but if in case we don't, if in case $4.93 is the bottom, I can adjust this Fibonacci extension to include the low from over here, and those would be some levels that we might be bumping into some resistance around. I'm actually just going to make sure that is based on, 493 right there. And so those levels, the 618, ideally we could be getting higher than that. That's going to be around $9.70. It does look like that corresponds with a little bit of consolidation over here, but it's not necessarily that substantial. So if we do get up to around $10 a share, also that being kind of a psychological level, one $10 bill, maybe we get a pullback there, or at least consolidate there before the next leg up, which could be bringing us to right around $11 a share. Also corresponding, with this 100%, or, the bottom over here at 1088. The 786 here in white is at $11 a share. So that could be some resistance corresponding with the bottom over here. But again, it's quite possible we could go higher, as I do have this green line here at 1186, which corresponds very nicely with this consolidation here. So that green line. And if I take a step back or just adjust the axis a little to include this low from August 12th, that was at a price of 1186. That's why I have that level there. And actually thinking about this, I think this is kind of like a nice market psychology example of, basically exhausting buyers. And so what I see from this, and, again, this is just kind of my interpretation of it, so, take it as you will. But what I see here is, we have this big gap down here. So filling this gap, we'll be getting up to around 2108. That was the closing price on August 6th. And so following that gap down, we hit this low of 1186. But if we look at the pattern for that day, the candle, it's this dragonfly doji, big wick to the downside, buyers stepping in, pushing that stock price back up. And so, while that was a new low, it was bought up. But then if we look at what happened, the price kind of glided up, but then eventually it faded back down to that green line, got some dips below it, and then came down to this low of 1088. Bouncing from there, getting, this pretty nice move up, but then really just consolidating above that green horizontal line. And so from that, over here, we had a bunch of buyers that piled in, pushed the stock price up. Once we came back down to that range, buyers holding the stock price up. But as time goes on, I'm sure a lot of those who bought over here were saying, hey, this isn't going the direction I was hoping it would. I'm getting kind of tired of it. The next time it breaks out, I'm going to exit and I'll come back when it looks a little better. And so what do we see? This consolidation over here over the course of when we hit this low to breaking out over here, that spanned about 3 months. It looks like 91 calendar days or about 64 trading days, just being approximate. We had this consolidation here, but then once we broke above, people exited their positions. They said, you know, I need a breath of fresh air. I'm going to get out because I think this is just going to fade more. And what happened? Those who got out here did not buy back in once we crossed this green line at 1186 and the stock price faded. So I feel like that's just a really nice example of buyers stepping in, eventually getting exhausted, then exiting at this top, and then it fading lower. So, you know, I just find that to be really interesting. I just wanted to share that with you guys. You know, then I also wanted to point out some other levels to the upside. You know, I personally feel like the range from about 10, you know, maybe coming down to 970 up to around 12, or maybe going up to 1265. So that's the 100% extension from this Fibonacci extension that I have drawn here in white. And yeah, so really that range, let's say 950 to 1250, I think that's going to be some tough resistance to get through because we have all of this consolidation here. Those who took a breath of fresh air here and exited were smart. Those who did not exit here, they might want that breath of fresh air, especially after the stock has come down so much. Maybe they got their average down, and so when it comes up to here, they can take profit, or maybe they just want to get out at break even. So I think there's going to be a lot of resistance here. And then just above that, we have this gap here at 1470. That was the closing price on November 15th, just a few days before, this reverse split, the 1 for 15 reverse split, and that was the day prior to, you know, this big gap. So 1470 or right around 15, I think that could be some resistance. But then we also have, you know, I'm just going over all of the levels here. We got the 1618 at 1742. Might, you know, just be kind of an arbitrary number there, maybe 1750, or getting back to the highs here, 1860. I think, you know, that could be met with some resistance as well. And that does kind of make sense because we had this top over here. We could see another top around there. And so with all of these levels that I've talked about, I've even mentioned this gap here at 2108. I have to say that my fairly small position that I have, my average, is right around $17 a share. And so I was thinking about it this morning, just thinking about the chart, what's going on with it, thinking about how I think we will be bumping into resistance between $10 and $12. I should really try to get my average down to $12 a share. And, you know, I think that's pretty feasible for me. But the reason why I would want to do that is not necessarily to just pile into it, but just to get my average down. So when we do get up to, whether it's 10 or 12, whatever it is, close enough to my average, I can start to take some risk off the table, either trim or completely exit, because at that point, I suspect we will see a pullback, and then I could just more comfortably establish a position that, you know, I'm not deep underwater with. As you know, now I am more than 50% down. It would be nice to, you know, trim some of that risk so I can more comfortably buy dips. And so, yeah, I just wanted to mention that because I think that we could be moving higher. And if we are to be doing that, I think now is really, you know, kind of the time to be getting averages down. But at the same time, you know, we got rejected from the 1618 here at 611. We closed below it, also closed below $6 a share. I'm not exactly sure what max pain was for today. I'll have to go over that at the end of the video. Yeah, we closed below $6. And so I could imagine that represents some weakness and that this could be going lower, but we did hold yesterday's close of 548. So I think that looks really good. So I feel good about that. And I should mention where this white downtrend originates from. That actually goes back to the lows from over here. You can see the two pivot points, circle over here as well as the circle over here. This is based on the low from April 11th of 2024, and the other pivot point is based on the close, I believe, from September 10th. That's how I get that downtrend. And just looking at it, zooming in a little bit here, we can see that it respected it very nicely over here, hitting the low of 18.15 on April 18th, bouncing nicely from there. And then we got some tests wicking through that level, but ultimately respecting it with those closes. And it looks like those dates were ranging from August 7th to August 12th before we revisited over here in September. Again, getting a bounce, but then ultimately returning to that level. It looks like the beginning of December, trading below it, and now are right back there. So I do think that 6.11 or really $6 a share, kind of in that range, is going to be a pretty important level for us to reclaim, start moving higher. But I don't know if this is just going to be a massive move to the upside because it might be discouraging that we closed below 6 on a Friday. We closed above 550. We closed above 5. So I think that this is actually pretty good, even if it does look a little discouraging. So, yeah, I would keep an eye on that and just kind of keep in mind that, a couple of months ago, $6 a share was, not even thought of other than, suggestions by lines on a chart. But now we're trading around there. And so while 584, oh man, I missed the bottom at, 493. Maybe that's the bottom. Maybe it was missed. But I think bigger picture, it's better to think about, all of this, hopefully, ideally, as being the bottom. But if we do start to fade more, we're going to find new lows. So good to be cautious of that. I'm a big fan of dollar cost averaging or DCAing, whether that's daily or weekly or at specific levels. Personally, I think it's kind of bad to wait for specific levels, like let's say a retest of $5 a share, because maybe that doesn't happen. Maybe we do pull below 548, but maybe 525 acts as support. So I think it's kind of bad to just, at this point, be waiting for specific ultimate lows or whatever, because I think that's effectively getting greedy because generally, as long as it's very slow, and I'm talking super boring dollar cost averaging, like think about it as, personally, I make my coffee at home because I like to save a little bit of money. And so I don't think that DCAs should be really, more than, cups of coffee or, something like that. So it's just very casual to be able to do every day. But, with it around $6 a share, I think that could be a nice way to kind of passively get the average down, stay engaged with the stock price. And if it does start to go lower, if it starts to fade below 493, then, maybe one could get more aggressive with those daily DCAs or set some limit buy orders. But yeah, I think that we will be seeing some moves to the upside. I think that 2025 is going to be really good for tech. And yeah, so I think, I'm optimistic that 493 is the bottom, but I'm also prepared for it to go lower. Like I said, 469 or 420. Got to have fun with the numbers. But yeah, I am now going to kind of shift gears into talking about this timeline that I put together, just kind of going over automotive safety. And this just came from Googling some stuff. I thought it'd be fun to kind of put a little chart together that shows kind of advancements in auto safety. And I have to say, a lot of this is probably a bit arbitrary. I didn't spend that much time researching it, and I really just kind of threw this together, just over the past hour or so. But here, looking at the chart, I might actually get Ed out of the way so you can see it. We've got 1800 over here, and then behind me, maybe I'll remove myself for a second, we've got 2050 over here. And yeah, so that's kind of this general timeline that I'm working with. And the y-axis represents impacts, which I just kind of view as whenever there is kind of a milestone with automotive safety or just, automobiles in general, there's, a tick up. But if it's just kind of like a new company came about, then it just kind of stays flat. So it's kind of arbitrary, but kind of just wanted to depict this trend of safety standards increasing over time. And so basically, going back to when there were no cars to now when the goal is to have an uncrashable car. And so I'm just going to kind of go over these bullet points, kind of try to do it quickly, but I kind of want to include the details if you guys want to research this stuff yourselves. I think it's a pretty interesting aspect of the auto industry's history. And so this first point that I have back here, this is from, let's see, that's not the correct line. This is from 1840. It's not highlighting correctly. Let's see. Oh, there we go, 1840. And that is really just kind of an arbitrary point because from this, Mechanics magazine, it shows this work of George Cayley. And he did a lot of work with, I think, monoplane gliders. I'm not really too sure of what they are, but here's kind of a depiction of one of those. And he died in 1857, but it is recorded, that he created the first seatbelt in the mid 1800s. So I imagine it's before 1857, and so I was thinking, maybe 1840. The article here says 1852, but that is not for the seatbelt, for some other technology that he had developed around gliders. I just find that to be, kind of the beginning of auto safety. And interesting fact, I'm talking about a glider. It's because cars were not invented at this time. The automobile was not invented until right around 1885 by Benz. They had what is believed to be the first automobile patented, I think, straddling 1885 to 1886. So you can see what that looks like there. And kind of coincidentally, or perhaps related to this automobile coming out, or maybe because of safety concerns arising about it, the first safety belt was designed for an automobile that same year, 1885. And so here's the patent by E.J. Claghorn. And so you can see it actually doesn't really look like a very comfortable seatbelt that we're used to seeing today. It looks more like a climbing harness with just, one belt and all these little gadgets to kind of strap people in. And so we can see that there. And so as we started from zero here, before there was even an automobile, we start to move up higher. But, following that, we just saw some kind of, diversification in automobiles, different manufacturers coming out. And this doesn't necessarily relate to this story here about Luminar relating to safety, but Ford Motor Company began in 1903. And so, I'm American, and so I just feel like that's, a pretty important milestone for the auto industry, the Ford Motor Company. So I wanted to put that there, marking 1903. And then following that, in I believe 1927, Volvo was established. It's a Swedish car company, and they have been leaders in auto safety. So kind of wanted to go over some of that stuff, which I think really came from their pushes in that positive direction to make cars safer. And one of the things that followed, I'm not sure if this relates to Volvo or not, but this patent here is for the first airbag. It looks like that came out in 1953, and I have that marked. Let's see. Here is 1955, so maybe a little bit off. No, 1953. So yeah, there, that's correct. And so this is the first airbag invented, 1953. Cars are getting safer. There are different ways to keep people safe. And I should note that this patent is from John H. Hetrick, I believe. It's kind of tough to read, but I believe that's what it says there. And so, yeah, these cars are getting safer. And then, building upon this and kind of, this clunky looking seatbelt that was initially, created back here in the early in the mid 1800s. This was mid to late 1800s, 1885, same as this. How could I forget? There was an advancement in seatbelt technology. And so we can see that here. I believe Volvo was involved with this. This is the 3-point seatbelt, something that we're all used to seeing. And, I don't know how many of you would remember this, but, for me, growing up as a millennial, I remember cars, where like the middle seat would not be the 3-point seatbelt. It would always be just, like the over the lap seatbelt, kind of like this. But nowadays, I think that it's pretty standard for any seat in a car to be this 3-point seatbelt, much safer to, hold somebody back in their seat with that strap across the chest. And so that innovation came out, let's see, I'm just going to get these points to be matched up. Okay, so there's, this was, let's see, in 1955 was, I believe, the invention or the first patent of the 3-point safety belt or seat belt. And then following that, 1959, Volvo really kind of started to set the standard for cars having these 3-point seat belts. And then following these pushes for making cars safer, it became the law. And so in 1970, it should be where this point is here. That is when there was the first law for seatbelts, which came from, I believe, Victoria, Australia. And then later in the 80s and 90s, it became kind of standard in the US. And then over here, I believe this is 1999 when front seat passenger and driver airbags became standard. It might actually be 1998, but right around there. And then from that, we've just had so many expansions in the area of airbags, not just front, but also side, passengers in the back, all sorts of places in the car. There are even motorcycle airbags. So just huge advancements in that space, making cars and other motor vehicles safer. So I just, find that to be a very interesting point. I did want to include some stuff on this related to crash test dummies, but I, just didn't take the time to put it in. Be happy to add that if you guys want me to expand upon this. But one of the things that, I kind of see with this, seatbelt just being a very mechanical form of safety, airbags also being mechanical, but getting more into the technology. And so I feel like we're moving into the space of just making cars safer by technological advancements, not just simply mechanical advancements. And so like a crash test dummy is really going to test the mechanics, the performance of an airbag system. And so, that's, of course, very important. And there was a Congresswoman, I believe, there's a clip that came out about her talking about government spending on female crash test dummies that are designed with the traits of a woman rather than a man. And so, I find that to be pretty interesting. But what I understand about airbags and the technology behind them is that it's gotten so advanced that it doesn't really matter who's in what seat. They have sensors that detect what amount of pressure is needed to be placed to keep the person safe, no matter their body mass index or gender or, whatever. So I don't necessarily think that is as important as these technologies, because what we're moving into now is, kind of this autonomy or this, self-driving autopilot that has been developed. and that then relates to LiDAR technology. And so these points that go across here, so this 1999, that was the airbags being mandatory. And then following that, I believe in 2003, that is when Tesla was founded. And then, following that, Luminar over here in 2012. And with Tesla, the Roadster, getting the Model S out, and all of these vehicles, they had been making advancements in their autopilot program with different, let's see, I've got it in a tab over here, different hardware versions. This would be hardware 1, 2, 3, 4, and 5. I'm actually not sure what these points are exactly going higher, but just that there are these advancements. And so one of them actually, let's see, relates to Volvo and Luminar. So that was in 2020 between hardware 3 and 4. And so that would be, let's see, 2020 right here. This is where Volvo has a partnership. They establish a partnership with Luminar. And, Volvo, again, just really like leading the way and innovating with the safety technologies, or at least recognizing these technologies, incorporating them into their vehicles. So I just think that's really great. And so one of the things that I've always, found a little bit concerning about Tesla's autopilot, full self-driving, or FSD, is, a lot of the examples that I'd see of, summoning a car, like let's say I'm shopping at Walmart or Target, whatever shopping center, and, it's a beautiful day out, but I got a lot of groceries. I don't want to be walking them all the way out to the far side of the parking lot to get to my car, so I'm going to summon it. And so I summon the car to me. I've seen videos of this. I'm sure you guys have too. And, I think that's great, but at the same time, it's a nice day out. Do I really need to summon a car to me? No, when I need to summon the car is when it's raining out, when it's storming out, when it's icy out, snowing, blizzard, whatever, thunderstorms. That's when I want to be summoning this car to me so I don't get wet, when I don't slip on the ice, all of that stuff. And so, I've just got this image of the Tesla car here in the fog. And this actually comes from an article. I didn't read it. I read a little bit of it. I really just wanted the image. But there was kind of a concern about Teslas and their autopilot, or their self-driving, functioning in bad weather like fog. And the person responded, saying that, they live in the mountains, they deal with all sorts of weather, and there was no question that it performed well in these bad conditions. And so, I think that's great. I think that Tesla's doing a great job with the autonomy and the summoning of cars, self-driving, autopilot, whatever. I think that they're doing a lot of great stuff with that. But, what has been the trend with safety over time? It has not been, oh, we've got one seatbelt, we don't need airbags. We've already got a seatbelt, we don't need the 3-point seatbelt. We've got airbags in the front, we don't need them in the back. It's always this progression of making cars safer. And so whether it's coming from Tesla or Elon Musk, talking about the data and the storage, the processing, whatever, that goes into processing these 3D images to really, map out the environment, that it's just too intensive. It's not necessary. We can do it with visuals. And so that's what Tesla has been doing. But, we are seeing so many advancements in technology that are going to speed up the processing of whether it's images or 3D data fields like what we see with LiDAR. And so as technology advances, we will be able to handle and process these 3D map surfaces much better than we have been able to in the past. And so, I view that Tesla relying on visual images for their self-driving, you and I, we get around by seeing things visually. That's how we function. But these cars, they don't need to exist in that same space that we do. That's limited by the visual. They can be utilizing radar, lidar, whatever, to be seeing these 3D detailed maps of their surroundings, training the AI to better respond to the environment, the moving objects, to see through any bad weather, to really map out the environment. And one thing that I have to say, just from personal experience, I don't have a Tesla or any self-driving vehicles, but one thing that I have noticed backing out of my driveway in the morning when I go to work before the sun comes up, if it's raining, if it's foggy, if it's snowy, I have a hard time seeing behind me. Fortunately, I don't live on a busy street, so it's easy for me to back out of the driveway. But I can't see anything behind me using visuals, using cameras. And so I think that there's a real limitation to Tesla relying only on cameras. And based on this trend, based on this trajectory, and the goal of getting to an uncrashable car, I think that we're going to need to be incorporating LiDAR into that autopilot, full self-driving, whatever you want to call it, or name brand it, whatever. I think that LiDAR is going to be a key part of that, whether it's to complement or to replace. I imagine to complement the visual imagery that Tesla's using. And then so from this, we can have, 3D mapped environments that have images layered on top of that so we can really see the environment around us based on all of this data, and to ultimately make the uncrashable car. And while this point up here at the very end, I have that at 2030, I think that's probably like the timeline that I think is realistic for a company like Luminar to, not be at the bottom like we're seeing here, but to have actually, started to see the bottom be well behind us, and to see that uncrashable car be in the not so distant future. So I feel like probably about 5 years from now, I think LiDAR will be a complete game changer. And just thinking about, the processing of these images or this data that I was talking about, for 2024, AI was kind of the buzzword. I feel like the buzzword for 2025 is going to be, I'm drawing a blank on it right now, quantum. Quantum is going to be the buzzword. And so it's just like, we're making all of these advancements in our compute power, in compute. And I think that is just going to streamline this so that we're not using an analog technology like photo images. We're actually going to be using some stuff, data from this 3D space that will really be able to get us to the uncrashable car. But maybe, while Luminar might be more broadly implemented by 2030, being a profitable LiDAR company, it's also, Luminar is one company. Maybe it's not going to be the winner, so good to be cautious of that. I don't know too much about microvision, but, personally, I feel like Luminar seems like a safer bet, but, it is a free market, and maybe they're pushed out of it, so who knows about that. But coming back to the axis over here, going up to about 2050, I feel like maybe that's a reasonable time frame to see the real, true potential of a company like Luminar. And just think, if Tesla was founded back in 2003, and now they're at all-time highs, that's 21 years ago. And so with Luminar being founded, 12 years ago, they still got about a decade more to go before I feel like they're seeing like their true potential, which I think, like Tesla is, experiencing that now. So yeah, I think that there's a lot of upside potential for Luminar, for cars getting safer to the point of having an uncrashable car. I just have a lot of conviction in this kind of trend, and I feel like Luminar seems like, or at least LiDAR seems like a safe bet. I feel like Luminar seems like a good one, especially with this bounce. So I have a lot of confidence in that. I hope you guys do too. But before I close the video, I did mention that I wanted to go over, let's see, I need to pull up the Greeks, the data. It should be here, search. Where is this? Ticker Explorer, tools. I always have a hard time finding this. Ooh, I think it's over here. Nope, I want to look up the max pain for today before the day closes, and that should be under Greeks. Let's see, calendars. I don't want that. Searches. Let's see, where is this? Ticker Explorer. There we go. Greeks from unusual whales. I feel like they're a good, reliable source for this kind of data, so that's where I'm going to. And I am going to type in laser up here so we can see what their max pain was for today. And it was $5.50. And so while we closed below $6 a share, we closed above max pain. I think that's great. And I think that we could be seeing this start to really go higher, although I don't feel like there's a lot of great options data with Luminar. I've never been too impressed with it. But with what we've seen today, as long as we're not wicking back to and filling that gap at 548, I feel like we're likely to hang out around 6, find that as support before continuing higher. And like I said, I personally, not super aggressively, am going to take advantage of the time while we're down here to get my average down. So when we get up to the $10 to $12 range, I can either trim some at break even or take some profit. So if and when we do pull back, I can more comfortably buy the dip. And or, at that point, maybe I would just want to take some profits and find something else. But like I said, I think that there's a great long-term potential with Luminar. But, when trading the stock, not just simply investing, I think when we get up to 10 and 12, I think that'll be a nice time to kind of put on the brakes, pump the brakes, take a little bit off the top. So then if it does pull back, maybe coming down to 8 following that, maybe coming back down to 6, who knows? I would then be much more happy to add than, just diamond handing this whole time. So, my personal goal is to get my average down to around $12 a share, maybe over the course of the next month, but, maybe it takes longer, who knows? But yeah, that's probably just going to be either a very small daily DCA or a weekly DCA while it's down here. But again, as always, that is not financial advice. And, as always with Ed here, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Take care, you guys.